Buddy, it's Wednesday, the 15th of August, 2018, and the S&P 500 gapped lower here this morning and came down right to pretty much daily S3 rather on our pivot levels and the volume weighted average price from this gap lower and where this rally began on June 2nd. So we're below the volume weighted average price from that prior low. We're also below the volume weighted average price from the peak, and we're below the declining 5-day moving average. So while this is a level where we're looking for the potential of support, we're not going to be buyers here blindly into an area. We've been talking about 279.50 to 280, and so far it's looking like it's going to try to hold, but we have no evidence that buyers are really showing up. Besides a little bit of strength here at the end of the day, we moved beyond the 61.8% retracement of that prior low, so we're going to delete that now. And again, that's from this prior low. Here's our volume weighted average price from recent peak. And you can see that our week to date, 3-day volume weighted average price is where this rally kind of fizzled out here at the end of the day or rallied up to that level. So we continue to be overall a little bit cautious on the intermediate term. But again, the primary trend still is higher. We have higher highs and higher lows. We have a big level of prior resistance, which has held as support so far, and we're above a rising 50, 100, 150, and 200-day moving average. So intermediate term, we have reason to be cautious. Just like any time we break below that 5-day moving average, we get cautious, but it doesn't mean we're looking for the top. We'll know the top well after the fact. It's not time to start to looking to short everything because we still have primary uptrends. And the Nasdaq lost a little bit of ground here as well. For this market, when we look at a 65-minute time frame, you can see the volume weighted average price off of this low and a 31.8% of that move would bring it down to here 38.2% rather from this peak, this valley, the low to this peak rather 61.8%. Does tie in almost exactly with the volume weighted average price off that June low. So that's a level we'll be looking at here. We've also got that 50-day moving average. Last two times it touched it, it bounced pretty dramatically. Whether it can do it a third time or not, we'll find out, but we're not going to blindly buy into an area because of potential support. We're going to instead wait for actual evidence. When we look at the volume weighted average price off of the recent peak here, you can see we are of course below that as well, and the week to date volume weighted average price, the 3-day VWAP, and we're below declining 5-day moving average. So we're going to need to get back above and hold above 181 to get more neutral in the Nasdaq. For the Russell 2000, the trend line that we've been talking about on that daily time frame continues to hold this market up, and we tested it once again today. We also see down in that area that the volume weighted average price from the May low is in that same area as well. So let's look at that on a 130-minute time frame just to get a little bit better look at it from a shorter term perspective. So we were talking about rather the May low. If we break below the May low, then perhaps a test of this level, which ties in with the volume weighted average price off the April low, would be the next area to look at. The volume weighted average price off of this peak here that we've seen, we're back below that again. So, I still think that you have to look at this market and give the benefit of the doubt to the buyers on the longer term basis. We hold the trend line. We are, up near all-time highs, but it's giving us reason to say we don't want to add to a long position. We were looking to get involved last week if we break above some peaks, but it was unable to do that. So now we're in wait and watch mode. The semiconductors, this market, we've been talking about this trend line and the fact that it was likely to come down towards the low end of that range, which is also that's that purple right in here. That's the year-to-date volume weighted average price. Lines up pretty much with the 200-day moving average. So it seems as though it should try to stabilize in here. However, what it should try to do is not what it does all the time. We have a declining 5-day moving average, and we're lucky to have been stopped out last week, or it's discipline to get stopped out because it could have gone higher just as easily. But when we get stopped out, we take it, we move on, and we wait for the market to give us more evidence. If we take a look at the volume weighted average price off of these lows in June, you can see we're below that. So that's not a good sign. And we now have to look at this market as guilty till proven innocent on the intermediate term, as long as we remain below 105.5 to 106. Getting above 105.5 to 106 is not bullish intermediate term; it's more neutral. And on the daily time frame, we now have a declining 50-day moving average, so it continues to be a time to be cautious in there, as it does with the financials, which we were looking to get back down towards the 50-day moving average. It's coming in close to that level right now. And again, this is another group that just needs to be avoided at this time.